Welcome to the All Financial Hour podcast with Steve All.
The craziness of the market is going to continue for a while. I haven't had a lot of calls from clients, but I do get asked quite a bit when I'm out of the office, what's going on and what's going to happen. And I said, yes, fuel costs are going to go up when you're having problems in the Middle East. That's a given. Do I think it's going to be a long-term, everlasting effect? No. I look at it to the point where most of the commentary that you're going to hear at this time is, what do I believe that the worst case scenario could be? And we're going to talk about that. So then that gets out into the news media, and I hate to say it, news media makes their money on advertising, and the more people that call and come in from there. I do get the question when people come into the office, what do I think? And I said, you got to remember, Russia, Ukraine, hit us for a short amount of time, then everything settled back down. Everlasting effect? Yes, it could affect oil prices. We're a little bit more protected on it this time because we now pump so much oil, but the world market, it will start to affect the price of everything. Because you look at, I don't care what's on your desk, you're driving your car, most of the things in your car have oil in it somehow. So the overlying cost of things will increase. But do I think this is going to be a 15-year war? No. I think this is going to slow down fairly quickly. Are we going to have effects from it? Yes, we are. So we go from there. And if you're nervous, I'm going to ask, we'll talk about it here in a minute, what are you doing to protect your gains? If you're really concerned about it and you really want to lock some things down, we'll talk about that a little later in the show on ways that you might be able to protect the gains, use those money on the side, and then dollar cost back average into a market. So we'll talk about that again a little bit later. But I think there's opportunities here. I look at it, do you have a well-diversified portfolio? Is it tactically managed so that if it does go negative, that it will move away from the market? Or is it always all of it static? If those things you're not sure what that means, give us a call because we like to do both. I have static portfolios and I have managed portfolios. And that's on the investment side of it. So give us a call and let us see if we might be able to help alleviate some of that fear that you got going on inside right now.
Yeah, alleviate some of that fear, bring down some of that anxiety that's keeping you up late at night. Again, that phone number, 636-230-8824. Again, that's 636-230-8824. More about the market and its volatility coming up in just a few moments. But what else is making some folks nervous, Steve, is Social Security. There was a recent report from the Congressional Budget Office that says they expect the program's trust fund to run dry a year earlier than originally projected. Now they're back down to 2032. If Congress does absolutely nothing, Social Security recipients would see an average 28% cut in monthly benefits, right? Many economists believe that Congress will eventually have to raise taxes to keep up with this, keep it afloat. Do you see this happening?
I look at it to the point, I think, one, they will make changes in Social Security. It's the safety net. It was designed for people that have outlived life expectancy. I don't think they're going to move the age to 85 or 86, but it is there for old age survivors' disability insurance is what Social Security stands for. So we have to look at it. What are we going to do to protect? I believe Congress will act. There are a few things that they're talking about. One, people that have net worths in excess, and I've heard numbers floated anywhere from $25 to $50 million, might not get their Social Security. And I'm going to sit here and say that's not fair. I'll agree with you. But I don't think a 28% decrease on somebody that's getting $900 a month, because most people that I speak with couldn't imagine trying to live on $900 a month, let alone 72% of that. So we start to look at it. How could we balance that out? I think Congress will do something to make it permanent. I agree with the fact that taxes will increase on it. The limits could go a lot higher, and they could means test it. That's what I'm talking about. You might not get it if your assets are so high. Well, Steve, that's unfair. I agree. But many years ago, Medicare was not means tested either. Now it's based upon your income. I think Social Security will be based upon your assets. So I do believe that they will change it. How do we do things about it now? Delay claiming as long as you possibly can. Don't start early because you think it might be lower. Get the most that you can possibly get, and if they do reduce it, you're still at a better place. Look at your income streams now. How could you create more guaranteed income? That could be done. But what I'm going to ask you to do, if you're 59 and a half or older and have not taken Social Security, give us a call. Let us do a Social Security optimization report. Find out when the best time for you to take Social Security would be, and look at your options around what would happen if Congress doesn't act and they would have to cut. Give us a call. Ask for that Social Security optimization report.
Absolutely. And the best part, it is complimentary to our radio listeners. The Social Security Optimization Report, helping guide you to decide when to take Social Security, how to take Social Security, when, how, and if these changes happen, how does it impact you? Again, the Social Security Optimization Report, complimentary when you call right now, 636-230-8824. That's 636-230-8824. You can also visit us online at yourmoneymattersstl.com. Want to make sure our listeners know about this upcoming event coming on April 7th. There at the office, Steve, the All Financial office. You guys are holding an event called Retirement Simplified. Tell me all about it.
Well, let us know you're coming. That's probably the first thing to do. But we're going to talk about what I call the pillars of financial planning. Social Security, what we just got done talking about, it is part of it. How do you optimize and get the best out of your Social Security, whether it be for just you or a spousal benefit? We're going to talk about your investments. How much risk are you taking and what's your reward that you're getting for that risk? Income planning. I believe that income planning should be more than don't worry about it. We're just going to take X number of dollars out of your accounts. What is the best way to look at how you're going to do income? Taxes. Everybody told us we were going to be in a lower tax bracket in retirement. And I do a lot of presentations and I get a lot of people that aren't. So taxes are going to be a part of it. So those are the main things that we're going to look at, what everybody goes through, so that we can look and make sure that you're prepared for retirement and make it as easy as possible. Again, Retirement Simplified.
And you can RSVP to this event. You must be on the list. Again, coming up on April 7th at the All Financial office. Again, this is Retirement Simplified. Call today to RSVP 636-230-8824. That's 636-230-8824. Again, that website, yourmoneymattersstl.com. You know, the two main savings vehicles for retirement are 401ks and IRAs. Both can hold a mix of tax-deferred and after-tax money. You know, in a 401k, there is a plan administrator who keeps track of this, so it's on you to know which dollars have already been taxed. Well, here's IRA whisperer Denise Appleby on Morningstar.
The primary reason for saving in IRAs is so that your earnings grow tax deferred and you pay taxes only when you take distributions of those amounts. It's about saving on taxes, and you lose all that benefit if you don't keep track of your after-tax amounts. You know, the tax preparer use what you give them, so don't assume that they know. Make sure you tell them about every type of transaction that occurs within your IRA.
All right, Steve, what are your thoughts on this?
Okay, that's the idea. We got both pre and post-tax money in our IRAs or 401ks. And if it's in an IRA, it could cause problems when you start taking money out. There are ways to fix that. You'll hear people talk about backdoor Roths, where you're making a non-deductible contribution into your IRA account and then move it to a Roth. If you have any IRAs, there's what's called a pro rata rule. So it makes it a little bit more different so that we can look at what Denise is talking about. You don't want to pay taxes on it twice because you have to account for it every single year and every time that you do it. So if you look on your statements and it says you've got pre and post-tax dollars in 401ks or IRAs, give us a call. Let us look at it and see what we could do to help you to make sure you don't have to keep all those accounting records further on down the road, and how we can best get it so that after-tax dollars can get into your Roth account a lot simpler. Give us a call. If you have before and after-tax dollars in IRAs and 401ks, give us a call, ask for the tax analysis, and allow us the opportunity to assist you so you don't have problems paying taxes on something twice if you can avoid it.
That's right. And again, guys, no excuses. This is complimentary offer to you right now. The tax analysis, 636-230-8824. That's 636-230-8824. And again, that website, yourmoneymattersstl.com. You know, one of the factors that can move markets is an election. Investment officer Sarah Malik tells CNBC she expects definitely some ups and downs this year.
If you look at history, during years where there's midterm elections, markets tend to have a lot of intra-year volatility. On average, intra-year, markets decline 18% at some point during the year, during a midterm election year. That doesn't mean it ends up that way, but it means we're going to be in for some volatility likely.
All right, so is this the year to start adjusting your risk level, or should that already be something that's part of your retirement plan, Steve?
I believe it should be something that's part, because of the fact that we start to look at it. I like to ask the question for people, what is the longest bull market that we've had in the history of the market? People will give me a lot of different answers, the 80s, and I'm going to tell you it's right now. If we look at 09 to kind of be the bottom, if it wasn't for the blip around the pandemic, we've had an upward trending market. And we look at some highly sought after investment advice. What is one of them? Buy low, sell high. What's the other one? Dollar cost averaging is the best way to invest in the market. Now, we do it our entire career when we're contributing to our 401ks and IRAs. We're putting a little bit in each year. Well, what happens when we retire? We're not putting in anymore. So we look at it to sit here and say, what could we do to help lock in some of those gains that you currently have in your portfolios? If I could protect those gains, put it in an asset class that can't go down due to market volatility. So if we have negative returns in the market or a downward trend in the market, that doesn't affect. I can take 10% of that balance, put it back into the market every year. What do we call that? Dollar cost average over the next 10 years to buy back into the market. If you're currently paying a fee to another advisor, no fee on that side of it. So it could reduce your cost. So what we like to do is we like to call that the strategic transfer of assets. What we're doing is a reallocation system is all that we're really looking at. And how could we lock in some of the gains that you've had? So we look at it. Bill and Jane, they had come into the office. They had about $850,000 in assets. They wanted to protect about $300,000. So you pick the number. If there's a number in your portfolio that you would like to protect, what would it be? So if that number, whatever it was, then let's look at, say, 10% of that goes back into the market each year. So I've locked in the gains at the highs, and now I'm putting money back in on a regular basis. And we believe that that's a great way to continue the dollar cost averaging even after we've stopped working. Now, that money that we took out, it's got caps on the amount that it can grow. There's pretty nice S&P 500 caps right now. So it's got the opportunity to make money, but it does not have the opportunity to lose money. Yes, we are in the insurance world when we're talking about that. So please give us a call. Ask how you could lock in your gains today and protect them so you can dollar cost average in the future. Call, ask about stars.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisory requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group LLC.
This radio show is intended for information purposes only.